Well, it was a back and forth day on Wall Street where we did see most indices close well off the highs, but also well off the lows. Most indices did close in the green here today. However, all four major U.S. equity indices remain with a bearish market forecast posture at the current juncture. In fact, we had oversold cluster signals occur on all four of our indices today, and that's the first time that happened in over 3 months where all four of them got that cluster signal on the same day. We did see the Dow do a little bit better than the S&P 500 today. Some of you might have heard that Boeing increased their dividend by over 20%, and so that helps support that price-weighted index since Boeing is the largest price stock in the Dow Jones. But in the end, we still have those bearish postures to contend with, so our trade application example today is going to focus on a once hot sector that's starting to sputter a little bit and see if we can take advantage of some of those downward price movements. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 18th, 2018. First of all, if you're new, welcome aboard. We're grateful to have you here tonight. Remember to subscribe to our YouTube channel, and while you're over there, check out our description area where you can sign up for our email distribution list, which will also entitle you to receiving all the stocks that are giving you overbought and oversold cluster signals within the S&P 500. In addition to YouTube, we're heavy users of Twitter. Make sure you're following me there. My handle is @BrandonVanZ. And lastly, we do have a presence on Facebook as well. You can see the group web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts here for the day. As you can see, I've got chart 4B pulled up in front of us for those of you that are premium market scholars that want to follow along at home. And as we look at this, it's a reminder that we're looking at four different indices here in the United States, the equity indices. So we've got the S&P 500 in the upper left. We've got the Dow Jones in the upper right. We've got the NASDAQ composite in the lower left and the Russell 2000 in the lower right. They mostly look the same, meaning we have a series of lower highs and lower lows that has really been in place since the beginning of October. Now, as I mentioned in the intro, one of the interesting developments here today was that we actually got oversold cluster signals on all four of our equity indices here today. Notice that we got these little green dots to show up. There's one down here right where the market forecast lines are, and then there's a corresponding dot underneath the price candle just to kind of draw your eye to that. Well, anyway, you'll notice that the Dow Jones, which had been kind of the stalwart of the four indices, if you could call it that, over the last few months, finally got its first two oversold cluster signals in the last 2 days. Notice that the other indices already had cluster signals, like the S&P 500 had one back there, and so did the NASDAQ. But for the Dow, it was really the first two oversold signals that we've had in the last 3 months. So it's pretty easy to then determine if we've ever had a day where all four of our indices had an oversold cluster signal on the same day, and that is today. So we've got the S&P 500s right there, we've got the Dow Joneses right there, we've got the Russell 2000s right there, and not to be outdone, there's the NASDAQ down below. So that's kind of interesting. Now, just because we've got an oversold cluster signal doesn't guarantee anything, but our research has shown that if you're anticipating a reversion to the mean over the next month, that the oversold cluster signals have a higher success rate in that reversion to the mean than overbought cluster signals. In other words, if you believe that to be true this time around, you might anticipate that there will be some sort of a bounce between now and a month from now. If that happens or not, it's anybody's guess. Remember that it's not going to be 100%, but it's better than a coin flip's chance. At least history has shown us that to be the case. Now, of course, we're in a very headline-driven market right now. So this could very well be a market that's driven by news stories out of the Fed. For example, we've got our interest rate announcement tomorrow. Most market participants are expecting a dividend increase, not a dividend increase, but an interest rate increase tomorrow out of the Fed. But it'll be interesting to see what they say beyond that. A lot of people have felt like the Fed has taken it a little too far with their expectations of further interest rate hikes in 2019. So many people are kind of thinking this is their opportunity to kind of tamp down that language and perhaps say that they're going to become a little bit more data dependent in 2019 rather than anticipating that interest rate hikes are a foregone conclusion. So tomorrow could be another volatile day on the books. And of course, we've always got the trade talks with China. We also have got a lot of people interested in the potential government shutdown. So the point I'm trying to make is, this is a market that's driven by sentiment, and right now that sentiment is mostly negative, so we've got to be mindful of that. But for those of you that are trying to take your shot on the long side, perhaps you'll be somewhat encouraged with those oversold cluster signals, because oftentimes they do lead to a bounce about a month later. So perhaps doing some bull put spreads or something like that, where you're not overly aggressive with your directionality, but you need some stabilization, that could play out. But today we did see the S&P 500 close up just barely by 0.01%. The Dow Jones was up 0.35%, largely due to Boeing, like I mentioned before. The NASDAQ was up 0.45%, and the Russell 2000 was actually down just a hair, down 0.07%. As you can see, the background colors of all four of those charts is still dark pink, telling us that we still have strongly bearish intermediate postures according to the market forecast indicator. Let's take a look at our next chart now. This will be chart 4C, and this will be our 3 green arrows chart, or in this case 3 red arrows chart, because as you can see, the background color is pink in all 4 of those cases, reminding us that on this chart setup we've got a red arrow on the moving average, meaning price is below the moving average like it has been for the last couple of weeks. We also have a red arrow on the MACD telling us that we have a loss of price momentum in these various indices. And then the stochastics as well, telling us that we are largely closing near the lows of recent price ranges rather than the highs, a sign that the bears are currently in control of the market, not the bulls. So, if you're looking for trend trades out there, trend trades appear to be working better on the bearish side of the coin rather than the bullish side of the coin, according to these charts. If we look at our next chart setup now, this will be our chart 4D as in dog. And you can see here, this is our 1040 crossover method chart. Now remember, these charts are going to look at the 4 same indices, but we're going to be looking at 3 years worth of time in each one of these charts rather than only 3 months. And each one of the candles that you see here is 1 week rather than 1 day. So what we're looking at here is the 10 and 40 period moving averages. Notice that the orange line is the 10 period moving average, and the blue line is the 40 period moving average. And as David and I have mentioned countless times in recent weeks, we've had a number of death crosses here recently. And this chart setup is designed to kind of highlight that and make it a little bit more visually easy to interpret, because it's going to change the background color from green to pink whenever we do have those death crosses taking place. So notice, of course, we've got the death cross already on the S&P 500, on the NASDAQ, and also on the Russell 2000, and kind of the holdup there was really the Dow Jones Industrial Average. Now, as I mentioned last week and the week before, it's fully my expectation that we'll have a death cross eventually on the Dow Jones as well, and we're starting to see the possibility of that existing as soon as this week. Now remember, because we're looking at weekly candle charts, technically it's not etched in stone until Friday afternoon when this weekly candle is done, but if this were Friday rather than Tuesday afternoon, it would officially have that crossover taking place as well. You can see that orange line just barely below the blue line there. Remember, if that's hard to see with the naked eye, you can also look at the MACD 2 lines that we've got established down below here. When this black line is below the pink horizontal line, it basically tells you you've got your 10 period moving average crossing below your 40 period moving average. So again, not a great sign there. Technically more of a bearish longer term bent towards that mentality right there as well. All right, let's go ahead and take a look here now at our next chart setup, and this one will be chart 4E. This will be our intermarket analysis 12 grid, and remember, when we're looking at the 12 grids, the pink background color will tell you if we have a bearish posture according to the market forecast intermediate term line, and the green background colors will tell you we have a bullish posture. So as we look at this first set of 12 grids, reminder that these are not technically stock market related. These are more bonds and interest rates and commodities and things like that. So as we look at this, a couple things that stood out to me here today is, first of all, the VIX went up again. Not a huge surprise there. We've been seeing more volatile trading action here recently, so be aware of that. We also saw interesting movements in government bonds. Now remember, you typically don't see those two things working in unison with one another, where volatility is up and government bonds are up dramatically as well. So, it's kind of an interesting kind of tie-in with kind of the state of the mindset of the investor right now. And you will see here that gold is up, and you will typically see that as being more of a risk-on mindset right there when people want to speculate on a product like gold. Remember, gold does not create an income stream. It is not a productive asset the way that a company's stock would be. But people do like to speculate with gold, and right now it's catching a little bit of a bid right there. So we'll keep our eye on that. Part of the reason behind that could have been that the dollar did fall just a little bit here today. Another big story today, some of you might have caught this, crude oil got crushed today. It was down 7, almost 8% here. And that has just been an absolute house of pain here for crude oil, plunging to yet new 3-month lows as of today. So really, really ugly there. That did carry over to many of the oil and gas stocks out there as well. Of course, that affected the master limited partnerships up here negatively as well. Remember that most master limited partnerships are pipeline related assets in the oil and gas space. And so when oil prices go down, those master limited partnerships tend to take it on the chin just a little bit there as well. So that's an ugly series of lower highs and lower lows. So really not a whole lot going to the plus column here on this chart setup other than some of those bonds that you see there in the middle. But let's take a peek here at our next 12 grid and see if we can glean anything from chart 4F, which is going to be our foreign stock markets. And as you can see, there is one key differentiator here on this chart, and that's right up here. It's India. India has been one of those charts that I've been pointing out here in these presentations recently that has been holding up better. Now, when we were looking at it before, it just wasn't going into a significant downtrend, and it was doing better on a relative basis. But today you can actually see excellent absolute percentage win here today, meaning that we weren't just holding the line when the rest of the stock markets were down. This was actually up 2.6% today here in India. So keep your eye on that story. There's not a whole lot of individual Indian ADRs that trade here in the United States, but I did notice that one of them, HDB, is a big bank over in India. That particular stock looks interesting. We're hitting new 3-month highs there, and it's a bit peculiar considering that financial stocks are largely getting hit pretty hard here in the United States. We'll talk about that here in just a moment. But otherwise, there's not a whole lot of bullish activity here from an international perspective, so that doesn't help the possibility of a bullish move along. Remember, if we have bullish spirits out there, we technically want to find a lot of those other markets helping support that bullishness. Right now, it seems like, if anything, all the markets are supporting bearishness out there. Let's take a look at our next 12 grid here. This 12 grid will be chart 4G. And this will be our U.S. sectors 12 grid here. And as you can see, it's a clean sweep for the bears. The chart in the upper left, as a reminder, is the S&P 500, and then all of the 11 charts that follow it are the sectors that make up the S&P 500, and all of them have a pink background. In other words, all of them have a bearish intermediate term posture as it stands right now. Some of the charts look a little bit better than others. So for instance, utilities, while they have had a really rough couple of days here recently, largely remain in a bit of an uptrend there. But most other sectors out there, if you're looking at energy as an example, it's plunging to new lows yet again. And again, since we talked about crude oil here just a moment ago, that will add into what we're seeing there with energy down 2.36% today, fresh lows for energy. So, pretty much wherever you're looking out there right now, you're seeing bearish elements developing into the U.S. Sectors. Let's go ahead and take a quick peek over here on the internet. Just a reminder that if you're watching this video on our website, you can come up here to the blog area and then watch that. That we do have an opportunity for you guys to click like on Twitter right here directly from our website. You can also click thumbs up on Facebook, and you can click like here on our website as well. So if you get benefit out of these videos, if you enjoy watching them, remember they are free for you guys, yet they take quite a bit of time for David and I to produce. So we want to make sure that our time is well spent. If you get value out of these videos, we just encourage you to click like there on social media to let us know. If you don't get value out of them, then don't click anything, and then we'll get the hint there as well. Also, a quick reminder that I taught my dividend growth investing class earlier today. It was a phenomenal class. For those of you that are premium scholars, make sure you go back and watch that recording there against two healthcare giants. And then David actually has his directional option strategies class coming up here at 6 p.m. Eastern time for those of you that want to jump into his class as well. The sector selector has been produced, and as you can see, one of the takeaways week over week, remember I produced this on Friday afternoons, so the key takeaway week over week, one of them is healthcare really fell. Notice that healthcare went from the number 2 slot a couple of weeks back to the number 3 slot last week, and then this week's ranking fell all the way to number 5. Now, as most of you are aware, part of that might have been due to Johnson & Johnson and some of the controversy around their baby powder. Of course, Johnson & Johnson is the largest healthcare company and therefore has an outsized impact on sentiment within that sector as well. Otherwise, what we've seen here is a congregation at the top of some of the more defensive areas of the market. Utilities remain number 1 yet again. Real estate remained number 2 yet again. And then staples went from number 5 to number 3. So staples and healthcare kind of flip-flopped rankings week over week right there. And one other thing I wanted to quickly point out was, on the bottom portion of the sector selector, take a look at all the new lows within the financials. I mean, there were so many new lows here that I actually had to take 2 different screenshots and then piece it back together. I couldn't fit it all on one screen. So it's ugly out there, whether you're looking at banks or brokers or insurance companies, pretty much across the board. You're getting some pretty ugly price action in the financial space. So that may be one area that you got to be a little bit more leery of. Otherwise, utilities, real estate, and staples kind of are the more bullish areas on a relative basis in this current marketplace. All right, so with that out of the way, let's go ahead and talk about our trade application example here for the day. I'm going to come over here to chart, let's call it 4A. And I wanted to pull up, first of all, let me show you XLV, which is healthcare. Notice that healthcare hit a new low on a 3-month basis. That's what this time frame of this chart is. Notice that we hit 85.6 on XLV, which tracks the healthcare sector. That is a new 3-month low. Now, keep in mind that this was actually doing reasonably well just a few weeks back before, this Johnson & Johnson deal hit and some of these other negative news stories that were hitting out there. Well, other areas within healthcare are struggling as well. I noticed that IBB looks quite similar. This is your biotech industry ETF. Notice that has a fairly consistent series of lower highs and lower lows there as well. One stock that I wanted to kind of focus on here today within the healthcare sector was Illumina. Now, Illumina has actually been a very strong growth stock over the last couple of years, but has been more sideways tracking here recently. And you will notice that it was up today. It was up 0.87% today, but its posture remains bearish. We still have that light pink background color right there. You can see that the green intermediate term line is pointing lower here on the market forecast, kind of dictating that bearish posture. So what I thought we would do today with this kind of sideways trending stock that is within a downward trending sector that's hitting new 3-month lows, where kind of the path of least resistance is to the downside, is do what's known as a bear call spread on Illumina. So let's come on over here to the trade tab on the Thinkorswim platform, and let's look at the January monthly contracts with 31 days left until expiration. Typically what I do is I look for a 30 delta. As you can see here, we do have a delta spot on 30, and that is your $340 strike on the call side. So I'm going to right click on that particular contract, go to sell vertical. That loads up our paper trade down below. As you can see, we're selling one contract of the $340 call, we're buying a contract at the $350 call. The net effect of those two things is a credit of 246. So this is a credit spread, meaning we're receiving money up front for putting the trade on. Our job is to keep as much of that credit as possible through the life of the trade. Now, because this is called a bear call spread, you should assume that the trade itself is considered bearish. And what we're hoping to accomplish with this trade is for this particular stock to stay below our sold strike in the spread. So our sold strike in this spread is $340. So note that this stock is currently trading at $313. So in other words, if this stock were to go down, let's say the stock market continues to struggle in the month to come and healthcare does as well, perhaps this stock will go down. Well, great. We'll definitely make money if the stock goes down. If the stock goes sideways, we'll make money. Even if the stock goes up $20 per share, believe it or not, we'll still make money on this bearish trade. We just can't have a massive move higher above 340 and just be flat out wrong with our analysis. At that point, we would then start to lose money. So remember that we're typically looking for a 30% return on risk on these credit spreads. And you can check that by just clicking confirm and send once, and then getting your calculator out here, and then taking the max profit, in this case, $246 divided by max loss, $754, and that's our 32.6% return on risk that we're looking for there with this trade idea. So I'm going to go ahead and send that in, and as a reminder, again, we want this stock to stay below 340. You can see that it was trading at 340 before topping out here with this two candle formation back here about a week or so ago. So anyway, we'll see how that does from a paper money perspective. All right, well, I want to thank you for joining me here today. The takeaway is we're still bearish. You know, it's nice to see a little bit of stability in the markets here today, but from an intermediate perspective, we continue to have those bearish postures. So if you're more speculative, a little bit more active with your account, you're probably looking at bearish trade setups. For those of you that are longer term oriented, remember, you're looking for values in high quality companies that have pulled back to attractive prices, kind of like we talked about today in my dividend growth investing class. So anyway, depends upon your mindset, but clearly these have been a little bit more difficult months that we've had here since the beginning of October. And so we'll see what 2019 brings, but for right now, we just have to be a little bit more conservative. So with that, I want to wish you all the best with your trades and your investments. Goodbye for now.